what's up, guys? All right, we're going to talk about US30 daily candle entry and exit plan. So the daily candle is about to close in about 15, 20 minutes, 25 minutes, something like that. And the candle should close something like this. Really long wick and small candle body. High is right here, low is down here. So let's go to the smaller time frame real quick. As in the last video, we had entry based off of this zone here. Again, the trading plan is for it to break the zone. So you can either get entry right here when it breaks or right here. And if it breaks the zone on the low side or the structure itself, you get out. If it goes back above, you get back in. So long story short, you can see how one of the entries would have lasted, and then, or you can wait for it to break completely strong and then come back, test, and then it had on a 15-minute 1, 2, 3 opportunities to enter, and then it went for about 700 points. So that's exactly what was predicted. Whether the first 500 level, 500 pips is the target, or if you could be creative and see that price would likely want to try to breach the current day open and then either come back in or just barely pass it. So take profit could have been right above. That's super creative mindset and thinking. So that move is complete. What is next? So with a big move like this, and for the most part, price on a very big downtrend, I want to be bullish, but I also have to read price action. I like looking at price action from the higher time frame. So the daily is like a perfect candle situation. Now I just got to tell you my plan of how I can enter this candle and then go from there. But the idea would be a wick fill. So price might want to open and test some of these highs underneath the current day high. And I'll show you what that looks like on lower time frames. And then the idea is to go for a wick fill. And then if that does happen, secure the profits and wait to see what's next. Whether secure all of it, some of it, we'll see what happens. To show you some examples of wick fills, like when this candle here was a thing, the candle when it opened, it went down, respected the low, and then came back up. And then for that day, it respected that high as well. And then the new candle came down, tested that 35, and then came up. So we'll see what happens. Right now we're in a very nice downtrend. I do want to be bullish to try to get some of these highs and stop losses of sellers that are all in this area. I think will be a very strong move up eventually whenever that happens. Maybe we can get 2 wicks down here and then like the candle come down for the day and back up. That would be very nice because we can anticipate that, close out, try to find a buy, because this is a good buy area regardless. So let's go down to the lower time frames to try to get a better picture. When it comes to strategy, I talked about in my last video how I found this entry zone. So when it comes to now where we're at, I'm trying to find that zone, right? So the strategy is 2 pin bars. So we got a pin bar. So I grab the low and the high, drag it out. That would be absolute best entry for the sell, in my opinion. So the bottom of the zone is at 200, 33,200. The top is 33,250. So it'll be a 50 point stop loss if I enter right when it gets in there. And then stop loss would be right above the structure. I would probably do the structure itself. If it pings me out to create a complete double top instead of a lower right side, then it takes me out. But guess what? At that point, if it breaks low, it needs to break low. I'll get back in. And if it consolidates, takes me out again, guess what? All the losses will be controlled. And if it breaks low again, I'll be getting in. To minimize how many times it takes you out, you can incorporate, like, if price is making the move at the end of a hour candle, or 15 minutes before the hour is up, and it's just running it, then I would say that would be a good entry in my opinion, because the last 15 minutes it could potentially come down on that 1 hour candle and have that rejection wick for that 1 hour, and then that next hour that comes up, it could probably test it one more time and then start to break lows and stuff like that. But we'll see what happens. So that's how I got that first level. And also I want to find another level, because depending on the situation, I might not want to enter right here. I might want to see it do that move I just said, reject, break also this pin bar situation. We got 1, 2 where the consolidation happened. And then what buyers or sellers who won in this situation? The sellers, briefly. And then we went into another consolidation. So anyways, I would probably advise extra safe confirmation would be let it play out here and then let it do the same thing here. So we would need it to break the low here, and then you can enter, and then stop loss could be right above. And if it takes you out, let it do it again, break the low, because you have now 2 confluences or 2 different levels instead of just this one. But better entry is going to be up here, obviously, if you're going for the sells. And then, so the idea is on a daily time frame, the daily candle would open, test today, which would be yesterday's high, and then reject. And then when it starts rejecting, you go back to the daily. It starts rejecting. We're looking for it to fill the wick. All right. We're looking for it to fill the wick. To what point? Probably the point of where the consolidation happened before the big move up. So that consolidation is right here. I would have TP at 32,500. I want to try to trade from the white line to white line, whether it's buys or sells. So for me, if it does that, that would be TP. I would then try to find, whether it's the same zones that I already have marked or a new zone. And the same thing that I'm doing here, I would do on the opposite side. So I would wait for it to break the box high. So if it takes my TP and then price still comes down, I would try to wait and then find my zone, mark it up. We'll get to that point if that happens, and just go from there. So that is the plan for US30 and how I'm going to be trying to trade US30. That's the strategy. I didn't catch this whole move right here because I didn't follow my strategy. Whenever price got into this area and rejected, I closed out. It was about a 5K win. And then I entered sales. And then, so it rejected. If it breaks the zone, which is right here, I need to be closing. I did not. I ended up closing up here, which is, it took all my losses and some. It took all my wins and some. So not a good situation, but the strategy itself works. I did the analysis of a higher time frame, and then I'm making extra moves and different choices on the lower time frames, which is not part of the rules. So stick to your rules if you have them. Give yourself a chance to have your strategy prove itself over, like I said, 1 month's time. If you're not comfortable doing that and you always want to change what you're doing, then hop on demo, or the risk is just going to be a lot higher if you're messing with FTMOs or live accounts, etc. So that's the purpose of the clip, is to discuss that real quick, and then the US30. And before I let y'all go, a perfect example could be found on gold. Last night, before I went to sleep, I had a entry right where the arrow is, and I was in profit pretty much right away on the 15-minute. As you can see, it rejected. I was in for the sell because price was very high, and I was just seeing things that it would be a sell. So if it's no problem, I could have a super tight stop loss if my entry is going to be here. Really, I should be waiting for it to break. That's the first goal and plan, and the best opportunity is wait for it to break, stop loss above. If that's a large range and you don't want to take that in drawdown, as far as your average or normal lot size, just lower your lot size to equal whatever risk you want to do to have the appropriate stop loss for the strategy that you have, whether it's the structure or the zone itself. You can see here the pin bar high, and then the lower time frame will show the pin bar high here, and then the pin bar low right here. And that's how I got this whole zone. So anyways, I would have got taken out, but instead I had my stop loss like right here. It went right to it and kept going. But then, like I said, the strategy says whenever it comes back, if it breaks, cool. Waiting for the retest on the lower time frames, we got that. So the retest, it broke the zone. So you can either get in right here, stop loss above, you would have been safe for the nice move again down. So the loss should have been very small, like right above. So your entry was here, stop loss was right above, and then so your risk is very small. And then that win, whenever it happens, as you can see, would have been very, very nice. So again, break, wait for it to retest, or just enter. Sometimes when it breaks, it just keeps going. That's why I like to play the when it breaks, I'm entering. And then when it comes back and retests and then starts breaking again, that's where you can either scale in, notice the time frame. Is it the opening of the 1 hour candle? Is there momentum? Is it London? Is it New York? And right here we can see this was right before New York session, and then New York kicked in right here on this candle, started consolidating, and about 2 hours into New York, we had that nice push down. So there's a lot of news conferences about Russia and this and that. Who knows? I'm not really trying to hear, is the news for Russia good or bad? Is that going to make gold? Is that going to make gold go down or up? I'm just going to look at price action and then let that play out for itself. So a lot of opportunities. As far as like where to target that sell, if you would have entered right here, we could target the next, where the big push started. So that would have been right here. It would have came all the way back on you, and then it would have filled the wick and kept going. And then the next level was over here. We're just boxing up that high on the 4 hours, just a nice little one candle right here at a daily open zone, and it came right to it. So it's easier said than done after the fact, but that's what's going on here. As far as like how to play gold from here, wait for the new daily candle open zone and play it the same way. If it breaks high, buy. If it breaks low, sell it. And if you have a certain bias, then you can just play it like that. And then if you want to sell, or if you want to buy and it starts selling and it doesn't break your high, then don't get in. Don't join the sell. But you can absolutely play these zones both ways. Like whenever price is consolidating here on a lower time frame, you can just hit pending order, whatever direction. If it goes, cool. If it goes this way, cool. So keep that in mind. So yeah, I'm going to wrap up this video, and we'll see y'all next time.